Hello friends, welcome back to your favorite channel Trading Technicals. It's been long time since I posted any video, and as per your request, I'm uploading a video what goes inside the trader's mind. Now let's look at it how a trader can make money or lose money in the stock market. We have seen lots of things which are going on in the current market, and if you would have seen from 2020, lots of traders either made huge money or they have lost huge money, right? So just to understand how certain people have made money and how certain people have lost money, and what are the factors which are affecting stock market traders, and how do they kind of either uh, become successful in the stock market or they lose money in the stock market. So let's go through the things. Now, what happens when certain people are kind of trading with certain things? Either people have a different strategies, different things, right? People go through different YouTube videos, different things, and they find out different strategies. They try those strategies, and um not most of them are actually using algo trading today, which has no emotions at all. But yes, people do lots of things on their manual thing, and lots of people don't have that kind of money, right, to invest in the algo trading and other things. So lots of people, what they do is they're working, they are kind of doing the trading part time. Some people are full time, they want to make money in the stock market, doing the full time trading. However, success is not with everybody. Success is only with a limited people, and as per the current report also, which shows only 2 to 3% people are actually making money from the stock market. Now let's understand what are the factors which impacts. Now your enemy in trading or your friend in trading. Okay, so I have mentioned enemy. We can consider as a friend also. If at all it works with your favor, it is a friend, right? So most of them, for these 90% of the people, or 90-95% of the people, when they lose money, this is the enemy in their trading life, right? So what is the first one? First one is lack of discipline or control over emotions. Now we have seen lots of people who trade, okay, who has some kind of setups, okay, but what they do, they will trade only on their emotions, and they will not have any disciplines to follow in the that particular strategy, right? Second thing which goes important is poor money management, right? So if you have 1 lakh rupees, you have started with 1 lakh rupees or 10,000 rupees or 5,000 rupees, whatever it is, we straight away go and invest all that money in the stock market, or we start trading with that kind of money, right? But we never think if at all it goes against us, what could be the scenario. Third one is the lack of education and preparation. So lots of people don't understand the stock market, don't understand. So lots of people, if you would have seen, using different indicators. Some of them, are good indicators. Some of them are bad indicators. Some of them are worst indicators, right? But the indicators, how do you use it? What is the exact, understanding of that indicator? That is what we need to understand before we get into any kind of strategy or any kind of indicators or any kind of preparation. So, are we doing a back testing on any kind of setup, whatever we are doing? The answer is no, right? So, we don't actually prepare ourselves for the stock market. And fourth one, and the important one, is neglecting the market dynamics. So, what is happening in the market? What kind of things which are changing? What are the global markets? What are the Indian markets, and how do we kind of trade with them? So the first one, what we need to understand is, and it would be very very common with between all of us, okay, the lack of discipline and emotions, okay, and most of them, if at all, that 90-95% people are losing, out of which I think 70-75% people will be losing only because of these emotions and not following the discipline, right? The first one comes to our mind, that is fear and greed, right? So fear, what happens? Basically, when we are entering into any kind of strategy or anything, right? Lots of people I have seen, they fail to even trigger that order, even though they have a 100% understanding of that particular strategy and all these things, but they still don't enter into the trade because of the kind of fear what they have. What if I go wrong? What if I lose this money, right? So that kind of people I have seen. So they are fantastic with their technical analysis, but they fail to kind of get into those trades and they miss out on those trades, right? The second one is the greed. Now, the greed kind of works in a different way, where we have seen lots of people. What they do is, if they have, just like I said, 1 lakh rupees or 10,000 rupees or 10 lakh rupees, whatever amount it is, they feel greedy. So they start looking out for an opportunities to make that 10,000 rupees, 20,000 rupees in a day one, right? And that is where most of the people will lose that kind of money. So greed has two different kind of things, right? So greed, if you look at it from a different perspective, greed is good, right? So any sportsman or anything, if you would have seen Virat Kohli, right? So every time whenever he is going on field, he will be trying to make most runs possible in that particular scenario, right? So every ball he will try to hit a six, right? So that is his greed, right? But that has followed by lots of things. So greed, sometimes it is good, sometimes it is bad. The way we take it out in a different perspective, right? But what happens in the stock market, when we kind of get into a stock market, we start doing certain things which we will not understand, and then suddenly if we are seeing market is falling, right? So we are not even bothered about what my setup is, whether I have missed that entry, or whether I have kind of I have certain things which probably I need to validate before I enter into trade. And that is where most of the people will kind of enter at in between the trade, right, in between the trend, or somewhere which is not a right place to enter, right? And then what happens is, then your place where exactly the trade should have been taken. So basically there would be a risk reward at that particular place, right? And if at all that risk reward is not in favor, I would not enter into that trade in a normal scenario. But what happens is, when suddenly I'm seeing, okay, market is continuously falling and it has gone beyond one level, and I still feel, right, it's like a FOMO. I'm missing out on the trade. I'm missing out on a big rally, like we had on this budget day, right, when the markets were suddenly falling. And then when people entered at the last point, which is already market has been sold out, right, it's oversold kind of territory, and that is the place where people were putting put entry, and what happened is market reversed 200 points, right? So that comes with a greed and the kind of FOMO, what we kind of understand in a different thing. Second thing, what happens is the overconfidence. Now, consider you have seen certain good runs in your P&Ls, and you had kind of 7 to 8 winning trades. Now, what happens? Your mind is getting into a different thing, and you start thinking that I cannot lose in this market, right? I will take whatever possible things, and that overconfidence, what happens is, you will take trades which are beyond your capital, or beyond your risk appetite. So what is happening is, certain people, if at all on a Thursdays, right? So you suddenly see, okay, market is in a particular thing, and I have kind of earned money in last 4 5 sessions, or whatever last 10 trades I have taken, and that has kind of gone into a right thing. And the Thursday is a complete different thing. Suddenly there is a lots of volatility. Sometimes the markets are only in a range, but that overconfidence is telling us, okay, whatever trade I take it, I can take anytime, right? So then we stop following our whatever setup is there, whatever strategy is there, or whatever we are following, right, continuously. And then we take trades at any particular time, and we lose out money. So that's like a overconfidence which kills us. So we should not go there and straight away enter into any trade till the time we don't analyze the market, don't understand our risk rewards, where exactly we are entering, where exactly we are exiting. Those things which we need to kind of understand before the overconfidence take our minds away, right? Third one is, and this is very very common. So most of these things are actually 80% of our psychology, right? So we look at it loss aversion, right? So most of us, what happens is, this is very very common in a retail fraternity, where you would have a situation where you have taken a trade, which is, say you have taken an option or a stock at 100 rupees, right? And you know, okay, your stop loss is 70 rupees or 75 rupees, right? You have already calculated what could be my loss in that scenario, whatever quantity it is, and depending on that, you will be taking certain calculations on that particular thing. But what is happening now, that particular option has come down to, say, 75 rupees, right? And your stop loss is at 70 rupees. Now you're suddenly understanding, okay, now there is a kind of loss which I am incurring, and whatever my plans were earlier, that has kind of completely gone into a different thing, and I can't take this loss. Or certain times what happens is, because your quantities are at a higher side, because you have not done the proper money management and other things, and when it is coming towards that stop loss and other things, we are thinking that, boss, I can't take this trade, right? I need to go back and average it, maybe, at that particular point. But the suggestion, simple suggestion here is, when it is going beyond that one particular stop loss which we have already decided, there is no question of averaging it, right? So averaging, first of all, it is not a good thing. Second thing is, you can average it maybe at a 90 rupees, right? When you know, okay, there is a part of this thing, and that averaging also has to be with an initial understanding of what would be my loss in case if the stop loss hits, right? So we need to understand these particular things when we do any kind of trades, that what would be my loss taking capacity, right? So when we are taking that kind of decisions, we come to that particular thing, that, okay, this is the place I need to cut down my trade, and this is the loss I can bear it for the day or for the month, right? So what happens, most of the people will enter or average at that particular point, or even in that certain cases, what happens is, they have taken an option at 100 rupees, especially if you would see in a certain volatile sessions, where suddenly the stop loss is hit, you are not ready to take the loss, and you continuously either average it or you hold that particular position, right? And especially in options, it is much more riskier, right? Because you are not going to get that premium back, even though the condition changes, and there are lots of other calculation which goes into thing. Now, in that scenario, most of the people will hold that trade. Even they will hold it till 50 rupees or 40 rupees or 30 rupees, and sometimes even it is zero, right? So, you would have seen some of the examples where people have lost 100% of their money on certain options, where they have entered at certain place, and but they are not willing to kind of exit at that particular trade. And this loss aversion comes from our kind of mindset, where we say, so we have that general thing, right? I will never say die or whatever it is, like those motivational things which are there, which comes into our thing, and we start thinking that, boss, I can't take this trade loss at any particular time, right? I will ensure I will get into a positive in this trade also. But most of the pro traders or the bigger traders, what they do, whenever it comes to that particular stop loss, they will exit their trade without even second thought, right? So that's a different difference between a retail trader and a pro trader or a big trader, right? So they have decided, okay, this is the place where I can take the loss. I will take the loss, that's it. And the same thing goes, so it's basically repetition, where the emotional attachment, now the emotional attachment, what is happening is, certain things I have taken and I am not ready to kind of ready to take that kind of loss, right? So I will do anything possible for that particular stock or that option to come back to my profitable thing. Or I take certain stocks which is almost like 50% down, right? Now certain people of this thing would have taken Adani, right? Now Adani comes down to, say, 30%, 40%, 50%, right? And we still consider, or we still kind of tell ourselves that, boss, this is not possible. I can't lose money, right? And this stock will reverse, or this stock will give me more money and all that thing in the later stages, and we will continue to hold that stock for a longer period. So that becomes our emotional attachment with that particular stock option or whatever security what we are holding. So that becomes our continuous thing, which is in a stock market, they say, right, there is you should not love any position what we are taking. We have to ensure we are exiting at that particular place itself wherever we have taken our stop loss. And see, most of the time risk reward will only come into picture when we are following our system. Okay, so if at all we don't have that risk reward thing in our mind, then it is not working. Or even though if you have risk reward thought in your mind and you have decided that at this particular place I need to exit my trade, but you are not able to exit that trade, that becomes your emotional attachment with that particular thing, and you start loving that particular thing and you don't want to get out of it, right? The fifth one is the performance anxiety. So now we start looking at short term results, right? So lots of people have seen, maybe they are not good at certain things, but they start following that particular thing. And what we start doing is we will start looking at the profits. So we will take a trade which is 100 rupees at a particular place, and we want to make sure that okay, we want to earn that kind of money, right? But what happens is, uh, I have decided, say 100 rupees I have taken the option, 70 rupees is my stop loss, and say 150 rupees is my target or 160 rupees is my target, right? Certain times what will happen is, because I had a good run or a bad run or whatever it is, right? In that particular thing, when it goes to 110 or 115, I will start getting that anxiety that okay, I need to book it, I need to ensure I end up into a profit, right? That's a very common thing. You would accept it that every time whenever we enter, we try to get out of it immediately as soon as possible, right? Because as soon as we see some green, okay, 4,000, 5,000, 10,000, whatever, 1 lakh rupees, we get it, we want to book it, but we are not waiting for the targets, right? This is very, very common with a retail trader, where we will not wait for our targets, but we will definitely wait for our uh, losses somewhere, right? So this is like, we have to constantly monitor our trades to understand where exactly, see, there might be certain situations where you get that feeling that okay, markets are gonna reverse and you are exiting that particular trade. It's a different thing, right? But when we are considering, okay, we have certain places and where we are, we have to book our profits at one particular place, and we are not booking at that particular place, or we are looking at a more trades which are giving me 10 rupees profits rather than looking at 50 rupees, 60 rupees, or whatever it is. Then what happens is the overall balance of your trades or your P&L will change, right? And lots of people will also have one habit of, when we enter, we will only start looking at our P&L rather than looking at the process of how long it can go or where it can go. Because what happens is, when we are taking certain things, we are not deciding in mind, right, that okay, this is my place or this is what my profit is. If I see some green 10 points, 5 points, or whatever it is, I start feeling okay, anxiety, that okay, I need to book my things. So all these things, what we need to do is, basically our plan of action should be, we should develop a strong discipline in a in a in a trading plan, right? And we should have a clear trading plan, that okay, this is what it is, this is the level it opens, this is the level it closes, I will exit my trade, I will not try to hold my trade, or I will book my profits at this particular location, right? Certain times booking loss is something which is really, really important. And that particular thing, if you understand, I think you will be able to kind of make more money in a stock market. Now let's look at the next part of it, which is poor money management. Okay. Now when our emotions gets impacted, okay, we will have this money management thing also coming into our thing. Now, what we do, we are not setting any trading plan, right? We are only going with whatever we feel, right? At a one particular place. If somebody has told, okay, buy this, we are buying without even thinking, right? We are not even planning, or we are not even looking at what exactly happens, where exactly the stock will be. And there are lots of gurus around you who would suggest you, right, that buy this, buy that, sell that, this, that, all that thing. And especially Telegram, Twitter, and all these social medias which will give you lots of these advices. Now, how many of them are actually successful? You go and ask any person who has followed any kind of these tips and tricks. Probably answer would be very minimal, right, or maybe zero. So we need to have our own trading plan. We should not follow any other person's trading plan. We should look out for our defined risk management, and we should look out for what would be my risk reward, where exactly I will enter the trade, where exactly I will exit the trade, which are the selling points, which are the buying points, right? If we understand that, I think we will have a much robust trading plan in place. Second thing is over leveraging. Now, over leveraging, what happens is we are taking a position which is much more beyond our limit, right? Or certain places, even we are considering a borrowed money which we have installed, kind of put it in the market, and we are trying to trade with that way, which ideally we have no capacity to lose, right? And when this situation happens, your mind is not in a place to take the trade. Trading is all about mindset. It is nothing about how best your strategy is and all those things. Any strategy, anything which you follow, whether it is a moving average, whether it is a candela pivots or a normal pivots or a price action, everything will have a probability, right, whether winning or losing. But certain times what happens is when the fear comes in, or where the greed comes in, we are completely in a different thing when our position size is not in particular place, right, or certain things which we cannot lose in the stock market, right? That is where we lose out lots of money. Then the lack of diversification. This is generally for the investments where we are looking at only one sector, right? So if at all the banking is running, we are buying all possible things which are related to the banks, right? And so we our portfolio will be completely on a stock which is running in one direction. And when those industries or those sectors, when they start coming down, it is completely our problem, right? We can't book those losses or book certain things, right? So we need to understand those particular things when we are looking at an investment plan. We have to have a diversification. We have to have a different industries in our portfolio, so that in a longer run, when one industry is down, the other industry takes over that particular thing. So that will help you to kind of hedge your portfolio in some certain ways, right? uh, Fourth one is not following the risk management plan, and this is, I think, we discussed in earlier slide also, that we are not following our risk management plan, where we are not thinking how much we can take a risk on certain things, right? So no use of buying certain things at one particular place, and no use of selling certain things at a one particular place, right? So we have to have a risk management plan as per our capacity. So if my capital is say 1 lakh rupees, and I need to kind of have I should have a realistic picture which is almost like 3% to 4% in a maximum gains in things. And then we should have what would be my risk. So if at all 1 lakh rupees is there, what would be my risk in that particular place, right? So is it 5,000 rupees, is it 10,000 rupees, what is my risk for the day, risk for the month, risk for the year, right? That is what I need to start thinking. Then emotional trading, we discussed multiple things which are already there in the emotional part of trading. How do we kind of we do certain things. And then we have chasing losses. Chasing losses is the person will try to do anything and everything to uh, you know to make sure that loss is kind of either reduced or cost to cost or whatever profit. Yeah, we will try doing whatever possible thing. Maybe we will try averaging. We will start holding that position for a longer period. All that things, right? So if at all we cut down on that thing, if we have a proper money management in place, I think we will be able to kind of make good money out of it, and not tracking the results. So any strategy, anything, whatever we see, follow by given by anybody, or even if it is your own strategy, right? Somewhere you need to understand one particular thing, that was, I need to first analyze what are the results, right? You might do paper trading, you might do back testing for a year or for at least 6 months, and understand, is this strategy really working in a longer run? Is it the strategy which is already has a proven results, right? And when we are doing those things, we have to start, if at all some strategies are giving you continuous losses, right? And might be it will give you one day, it will give you big profits, but it is giving you overall losses, right? So what is my kind of percentage of gains and percentage of losses in that? So those things we need to keep tracking, so that we are able to come up with the better strategies, better money management skills, better emotions to trade, that will help us to come into a next level of trading. Now, this is something which you would agree, you will disagree, because there are many people who are well educated with the stock market, but there are many who go with the half knowledge, and half knowledge is as good as having no knowledge, or kind of getting into a different territory, right? So it's like that story of Abhimanyu, right? Who gets into a Chakravyuh, but he has a half knowledge how to, first of all, enter that particular thing, but we don't know how to come out of it, right? So that is where it is very, very important that we have a complete knowledge of whatever we are following, whether it is a strategy, whether it is a market dynamics, whatever it is. We need to start looking at how we understand the different markets. When the volatility is high, am I going to kind of risk my money when the volatility is too high? It might have a very big results or very big rewards, but it has a high chances of giving me a losses as well. Okay, so that I need to understand the market conditions before I enter into any kind of trade, right? Not staying up to the date with the market developments, right? So now certain people suddenly come up and ask me a question, why is Adani stock falling, right? So people are not following. So when you are doing certain things, right? When you're studying certain, maybe if you want to become a doctor, and if you want to become maybe a journalist or whatever it is, or maybe a cricket player, right? You would go into a deep understanding of what is my current this thing, right? And my favorite is cricket, so basically I will talk about cricket. So basically, if you have certain pitch conditions, right, which are not, so if you're going to Australia and you're trying to play with a bouncy ball, right, and if you're not prepared with that, so you need to have that information, right? What is happening in the market thing, what are the kind of news which are running in, what are the kind of things which are there, and should I invest? And some certain people had invested in Adani's when it was zooming and it was at the top, right? So people have kind of not understood, okay, it is already run so much, whether it will have that kind of thing, and should I wait for one retracement, or should I wait for it to come little down and then probably that dip I will buy? Answer is no, right? So lots of people don't understand the market developments, what is happening. They have to kind of update their knowledge every day, right? Failing to develop with the trading strategies. Now this is kind of it's like, we have seen so many strategies, right? I myself have given so many strategies to you, and lots of people come back with the different results, right? They will follow one day, then they will follow the another strategy another day, and then they will continue to continue to do certain things, and what will happen is they will not have their own understanding of that strategy, right? Or they will not have a complete understanding of the strategy, and what will happen is you will end up getting into a different thing when the strategies are failing, right? So you are not understanding the complete set of strategy. You are getting into a strategy which has no meaning to you, but and you are not even testing it on your own. You are just blindly going, and okay, this person has told, this guru has told me to buy this, and I am straight away entering into the stock, right? Or entering into whatever levels. That is not going to work with anybody. Okay, so you need to develop your own trading strategies, so that you have your own risk reward, you have your own understanding of the market, you have own understanding of the different dynamics which are there with that strategies, and you will come out of that particular thing. So even if it is giving you 2 days losses, and third day it might give you a big result. It has a meaning, right? So that you need to understand when we are developing any strategies, or you have to have your own strategies. uh, Fourth one is very very important. Lots of people, what they do is they will have lots of trades which are going on. Okay, end of the day, when you look at it, they have made 10,000 rupees, 50,000 rupees, or whatever it is. Okay, but to make that 10,000 rupees or 5,000 rupees or 15,000 rupees or 1 lakh rupees, they have not understood the how many trades they have taken, and what kind of taxes and fees and brokerage whatever we have paid, right? And when they actually get their notes in the evening, they realize they're hardly getting anything in the hand, right? So general example of options, right? When we are buying selling options, generally buying options, not selling options, but when we are buying options, right? So when we are buying options, when the VIX goes up to some 17 18, right, like budget days and all those things, when we had VIX was 17 18, right, and your option prices have shoot up. Now when your option prices are shooting up, your taxes on that particular thing is increasing, right? On top of that, you have a normal brokerage. Now we have, say, certain brokers who are giving free of cost trades and all this thing, but there are other taxes, other government duties which are there, which we have not considered. Now lots of people trades in futures, right, and they will book 2 points, 3 points, 5 points, right? But are they actually getting anything out of it? Answer is no, right? So we need to kind of calculate when we are doing the money management. We need to kind of calculate that particular thing also, that okay, when my profit reaches to this particular thing, how much I would have in my hand end of the day, right? When I'm losing, when I'm gaining, whatever it is, what would be my overall transaction cost for that particular thing. It's just like a business, right, for us to follow. So whenever we are entering any investment, we need to have all these things in place. And the fifth one is over reliance on tips and rumors. Now, lots of people only follow Telegram, YouTube, uh, whatever, Twitter, whatever social media, right? Or they have certain follow, people whom they follow, and they suddenly take certain trades, right? Now, certain strategies works for somebody, certain strategies works for somebody, and it actually doesn't make any sense following something blindly. So I always suggest you go ahead and first learn, find out your own strategy, whatever tips and tricks, whatever rumors which are coming in, you find out with your own levels whether those levels are broken, those levels are kind of taken out, and whether the trade is making sense. So if we understand all these things, you will never follow any kind of tips or rumors or anything, right? So we need to kind of, in certain places now people will start selling Adani, right, for whatever reasons, whatever things are there. But you need to kind of analyze what is that happening, right? Your own research, your own analysis will make that difference in your own trading. So please start finding out those things which will kind of help you in a longer run. Now, the important thing again, going back to what is happening in the stock market, right? And what happens is we are not understanding the market dynamics, right? We are not we are not following any economic indicators, right? So what is our GDP? What is happening on the GDP, right? What is happening on the oil prices? What is happening on the interest rates? All these things we never try to understand. We just want to get inside the stock market and we start taking those trades, right, without understanding anything. Now, if at all certain things which are there, like your inflation or the interest rate which are there, if those factors are affecting your business somewhere, what would be my sentiment to that, right? So all these things if we understand, then only we will be able to make money out of this, right? So if at all the market is running and okay, we know okay, interest rates are also going high, or the inflation is also high, and certain things are not working, so is that a right time for me to invest? Answer is no, right? I would look out for certain opportunities. Maybe I will go for a defensive stocks, right, which probably would give me better money. Second one is not following the news events. So if at all there are events which are planned, right? Maybe Fed policy or maybe RBI policy, right? If you know, okay, these are the events which are planned already, and if you are not following those events, what has happened in that event, then we get into a different state altogether. We have our own biases towards the market, and then we will start looking at different things. So those things which we need to kind of consider before we take any trades. If you know, okay, there is an event which is planned, and if at all that result is going to come at 10 o'clock, it is better to wait for the 10, 10, 15 to understand what market is reacting to that particular thing. Now on budget day, market was zooming up. Everybody was in a different thing. I had mentioned that market might fall in the second half, and exactly the same thing happened. The kind of sell-off came, nobody expected, neither I expected nor you expected, right? So all these things, the big guys will always play with that kind of thing. They will make, and that liquidity is always required for the big guys to play with. And what who gives that liquidity? We give that liquidity to them, right? So we need to understand what is happening on those news, and take those things into consideration. Failing to adapt to the market changes, we always have our own biases, right? And certain strategies which works on certain days, certain strategies doesn't work on certain days, right? There would be certain basic price action which will work on most of the situations, but yes, there are certain situations where COVID time, there were or even the recent times also, if you would have seen, markets going in a different direction. So bank nifty, one candle it is giving 150 points or 200 points, right? So we are not adopting to that particular change, and we are thinking that, boss, I need to take certain trades at a certain point only, I will not I will follow my strategy only, right? So we need to understand whether our strategies are suitable for that particular thing. Certain sideways days, lots of stop losses will hit on both the sides, or certain days the momentum itself is not there, and we are following some momentum indicators which will not give you any kind of trades, right? So either if you are following, okay, if I am not trading on that particular day, it is fine, but we need to also adapt on certain things which are market is telling us to change. Overlooking the market sentiments, again this goes back to the similar kind of thing. What are our sentiments, right? Market sentiments are positive, negative, neutral, what it is, right? And if we don't follow that sentiments, what we do is we enter into something which is not right at the right time, right? So we kind of try to enter at a certain places which is not right for us to invest or to take a trade. And if at all it is a bullish sentiment or a bearish sentiment in the market, right? And we are what we are trying to do, we are going exactly opposite because we think something is right or not. Okay? So we need to understand what are the market sentiments overall, what we kind of understand from it, and how do we kind of take trades on that. And last one is monitoring, not monitoring the trends. Now, I always say this, right? You have to do your analysis according to the market trends. Now, look at your weekly chart or look at a daily chart, right? What it will tell you, that markets are in a range, right? It is playing. The range might be very big in certain places, right? When the markets are volatile, you will have a different range altogether which is being played, right? So what happens is we we get into a different thing altogether. Whether it is a negative trend, then I should look out for a sell trade only. And there are certain strategies, where it will not give you result every day, or it might give you essence at certain days. But if I decided that okay, my market trend is negative, and I will take only short side trades, I might miss out on some long trades. It's okay, but in a long run, if you have to make money, we have to follow the market trends in a longer run, right? So that 5 minute chart or 1 minute chart or 2 minute chart may not help us to make that kind of money, right? So these particular things we need to understand, and this is what I wanted to cover up for you. These are all things which we have to kind of take into consideration if at all we want to make a positive impact on our P&Ls, positive impact on our money making business, whatever we are getting into. And if you think something can be added to this, yes, do comment on this video. Probably it will help me to understand what all things, other aspects which we need to consider. And also do let me your feedback. Do subscribe to this channel and hit that like button. Thank you guys. Have a nice day.